this is supposed to be one of those sort of wonky speeches. It's not supposed to break any news. It's supposed to focus on his task forces and all these other sort of mechanisms about what's going on behind the scenes. But I mean, as I'm sure you know, the market wants to hear something a little bit more direct. Do you think we're going to get it?
I think we've got to get it. We have heard reporting that Kevin Warsh has said that he'd like to reset after the July press conference, which didn't go as well as I think as he would have liked. And I think what we need to hear from Kevin Warsh is, one, Fed independence, two, they are committed to bringing inflation down, and three, we do need to know something about their decision rule. He doesn't have to do forward guidance, but he has to give us some sense of if this happens, then what will the Fed do? And we're starting to hear that already from many within the Fed, that the PCE index, for instance, even Williams, who's more dovish, has said if we continue to see the core PCE go up at a more than 0.2% in a month, that is not something that's sustainable. That's too sticky of inflation, and I think that's exactly what we are going to see next week with the PCE, and that's before we see the full effects of the rebound in energy prices that we've seen. Diesel costs are really picking up quite dramatically, and we also have some refineries that are now full out at capacity, and some imports from Canada that are slowing down because of scheduled maintenance. So this is really going to be a very tough period for the Federal Reserve, and he's really got to look shorter, get to the point, and be independent, but also give us some context for how the Fed is thinking about where we are right now.
Yeah, and we should point out that PCE report coming a couple of days before he is scheduled to give his keynote speech. But it raises a question, too, about just how much he's going to have to change. He's had to change his speech, the written portion of it, and maybe change it further. We're heading into a weekend where we're supposed to come back on Monday. We're going to hear from Scott Bessent about economic sanctions on Iran, which could have an impact on the oil markets and inflation. And, of course, everything Bessent did this week with regards to trying to sort of cap long-term interest rates. I mean, does that just make his job, Kevin Warsh's job, that much harder?
Absolutely. I think, the fear is, the concern is, given the amount of pressure that we've seen from the administration in terms of interest rates and efforts by the Treasury to try to adhere and reduce interest rate costs. It really is only a couple basis points here or there. It doesn't change the equation much because the Treasury market's just too big. But the bottom line is that is now out there. And the fact that it's out there, Kevin Warsh needs to push back against that and be completely independent and put his money where his mouth is and say what he did in his hearings when he became Fed chair, and that is to maintain the Fed's independence.
Diane, I wanted to ask you about AI because Kevin Warsh has leaned on the idea that AI will be this deflationary force. But with the massive investment in infrastructure pushing up chip prices and energy prices in some cases, how do you expect him to, or whether do you expect him to square that circle and address that?
I think it's a hard one. We've heard him talk about productivity growth, but we know that productivity growth raises the interest rate, the non-inflationary, the speed limit of the economy, and that could mean that the current Fed funds rate is actually too low and more accommodative than it needs to be given the inflation we have. We also know there's a sequencing problem with AI. We have the costs from all that investment showing up first prior to all the benefits in terms of productivity growth, and I do believe we are in a productivity cycle that has picked up. We have seen a pickup in productivity growth. It's not AI driven entirely right now. A lot of it is due to the fact that we learned how to use a lot of the technology that we didn't know how to use, but we already had in place prior to the pandemic, but we learned how to use all of it during the pandemic, and that did boost productivity growth along with the labor market emerging from the pandemic. We saw people job hopping like crazy. They moved into more productive jobs where they got higher pay. That lifts productivity growth as well. Those are the reasons we've seen productivity growth increase thus far, and we may see that productivity from AI in the next couple of years, but the problem is it's also boosting the speed limit at which the economy can grow, which means a higher non-inflationary rate, which means the Fed's current rate is probably too low.
All right, and Diane, as we sort of get out of the Fed meeting, out of Jackson Hole, and look ahead to the actual Fed meeting and get back to this conversation about what the other Fed members think, what that debate looks like behind closed doors, and whether this sort of level of dissent is going to have any real material impact on the communication that Warsh might be trying to have, either in full or not, with the market.
Well, I think the bottom line is it's hard to put the genie back in the bottle of everybody talking a lot and being more transparent at the Fed. He needs buy-in from his colleagues, which is why you have task forces, but you also have to have task forces that engage them. And he has gotten a diversity of opinions on his task forces. And so, if he proceeds in a way that is very methodical, he will get buy-in. The question is how much and what will the final decision be? It won't be just his alone. And I think that's something people tend to forget, is that our central bank really is, the decisions are by a committee and they're not done by one person. And that's already been the challenge for Kevin Warsh, is that, he's got people on the committee that have pushed really hard to dissent against him at his second meeting, 3 dissents. That's a lot of dissents. And the minutes from the meeting really revealed that most people were willing to hold out a little longer, but they weren't exactly thinking about rate cuts. So this is a very different kind of scenario than I think he thought he was walking into back when he first auditioned for the job.